So, welcome today to Cash at College Spending, Saving, and Student Loans. We are going to address a lot of different topics today in a very short amount of time. It's time for class. So, that means that we want you to get access to lots of resources. We'll be putting those in the chat, as well as following up with an email after we're done with all the different things that we discussed. If there are any questions that we can't address or we want to provide some more resources for, we will include that in our follow-up email, which will go out later today or tomorrow, depending on how many questions there are to address. So I am going to talk a little bit about our hashtags. So we're on lots of social media, and you'll learn that later. If you want to share something that you've learned or surprised you on social media, tag it with UI Money, and we will retweet it or repost it or whatever social media jargon you want to use to share what you've learned. That'll be great. Just use the hashtag UI Money, and we can search for that if you have a public profile. Seisha and I are going to be talking about a lot of different things. I should probably tell you what my name is. My name is Andrea Pellegrini, and I run the Student Money Management Center for the University of Illinois system. So I am in Urbana today, but sometimes I'm in Chicago, and sometimes I'm in Springfield. So I travel a lot, and I'm going to hand it over to Seisha to talk about what she does in University of Illinois Extension real quick.
So my name is Seisha Grobben-Sitter, and I've been working for the University of Illinois Extension for almost 4 years now. Basically, instead of doing education in a classroom like a traditional professor, I do it out in my community.
Great, Seisha. And Seisha also does some statewide and nationwide outreach along with us. So we do a lot of the same things. So we partner together on things like today's webinar. We're going to, like I said earlier, just scratch the surface on several different financial topics that are really important when you go to school. So we're going to talk about planning your spending or budgeting, credit and how to use that wisely while you're in school, some of the legal protections you have using credit. We're going to talk about banking and the different financial tools that you might want to take advantage of while you're in school, as well as how to finance your degree and how to make the most of your time on campus. So that's an important part of what we're going to talk about today. And make sure that you're using that chat if you have any questions. So first off, I'm going to have Seisha talk about banking.
Thanks, Andrea. So we're going to talk a lot about banking for the next few slides. We want to talk about monitoring your accounts and watching for fees. So before we jump into this topic, I'd like to know about what financial tools you currently use. You can write your answers in the chat. So A is checks, B is cash, C is credit card, and D is debit card. And I'm going to put a E for everything. How about that? E for everything for me. Checks, cash, credit card, and debit card. I see some cash. I see all the above. I see just a few. Great, everybody. So one thing I want to talk about with keeping money safe. So money kept in deposit accounts in the United States are usually insured by the federal government. There are two types of financial institutions that are pretty common, which are banks and credit unions. They have deposit accounts like checking and savings accounts that are typically insured up to at least $250,000 per individual. So if you buy investment products at a financial institution like bonds, IRAs, or mutual funds, and these are not insured. If you're not sure, it's a good thing to ask. So banks are, of course, insured by the FDIC, the Federal Deposit Insurance Corporation, and credit unions are insured by the National Credit Union Association. So they are a little different because they do operate kind of differently, but they do the same function of keeping your money safe. So of course, we have lots of tools that we can use. We have a checking account, which is usually an on-demand account. And this is most of the time, this is how people pay for everyday expenses. Then of course up we have the savings account, which we can save money for either a long period of time or a short period of time, depending on what your goals are. We sometimes have an ATM card or a debit card, or sometimes we call them combo cards because they're coming from the same place. You can put your debit card in and get cash out of an ATM. You can go to a store and get cash out after you make a purchase. Those kind of things can be used for this account. And then, of course, lastly, we have online websites and even phone apps by downloading the app from your institution. So, for example, I use a large bank, and I can go onto my app and pay bills and check my account online. And usually, you have a password and a login for that. And sometimes they'll even use your thumbprint nowadays. So, some good things to know about when you're keeping your money safe. So we talked a little bit about checking accounts and savings accounts, but there are some major differences. So again, checking is an on-demand account, and you pay for these purchases either at a store or online. You can even pay through other websites if you feel so, like PayPal, or even using them through merchants that you are comfortable with. And then of course, savings accounts are there for you to save money. You can earn interest. But they may have a number of times you transfer money out, or they may have a limit on the balance. So, for example, you can only transfer money out of your savings twice a month, or maybe you have to have at least $500 in the account. And then, of course, the savings can be used for long-term goals or even emergencies. So, with money, we have these plastic cards that they give us. One thing is that, we have a debit card versus a credit card. And the debit card, of course, is the money that comes straight from your checking account. So there's low to no cost to get the money that you need for your purchases. With a credit card, you charge the card from an institution. We have big names like Visa or MasterCard or even American Express, and then you pay the bill in full later. So typically, it costs extra to get this cash out if you want it from your credit card, but it does have better protection. So one thing I should note is that with a debit card, when you go to a store and you get, you use your PIN number as the debit, that money's going to come out immediately. But if you use it, let's say as a credit card, it'll take a few days. So just things to be aware when you're out shopping. So some other things to just remember is that they are, don't share your PIN number, especially from your debit card. We have less federal protection if someone steals or uses your debit card than with the credit card. But we'll talk more about that in the credit section. So one thing to know is that debit card numbers are not your routing and account numbers. This can get confusing, especially if you're setting up something for the first time. But you can always go to your bank and go to their website and see what the routing number is. And then, of course, you're going to have the information for your account number. So just one thing to clarify for those out there who may be using it for the first time. So, of course, you can keep track of your balance by using a checkbook, which is a little old school. We don't mind that, but if that's your way, that's a great way to do it. You can either check your account online via your smartphone or your computer. You can also get alerts sent to you so that if you go below a certain dollar amount, that money will let you notify, like, hey, you have your last $20. Put some more money in. We just want to let you know. You can also check your balance by sending a text message. And of course, you can always go into the bank or even call customer service to get it. One thing I really like to do now is if a balance goes over a certain dollar amount, it notifies me. So I have a little son and he goes to daycare and they pull money on a weekly basis. So every Friday I get a little notification that says, hey, you paid your daycare fees and it's over this dollar amount, and it always lets me know every Friday. So one of those things, it's just important to have alerts on your account if that's something that's important to you. Of course, we want to keep your financial information secure, especially if you don't know your roommates too well. You never know who could steal your information and use it against you. So don't write your passwords down or leave them near your computer. And don't share that PIN number of your debit card with anyone, especially roommates. If you do make purchases online, look for the S in the website or look for the lock symbol to make sure the site's secure. So when you go to look at the website, like for example, any kind of pay site, you're going to see HTTPS, and that's going to show that the website is secure. You can also know that your bank or credit union is never going to ask you for information. So if you get an email or a call, you want to hang up or call your bank and ask, that this is that they really did call you. You might be the first person in a new scam and the bank doesn't know about it. So it's better to ask than not ask. We never know these days. So hanging up the phone or checking that email is a good way to make sure that we're not getting caught up in some kind of fraud or scam or identity theft issue. So how many of you have smartphones? I know I have a smartphone. I really enjoy using it. Both smartphone browsers and financial institutions provide security. So always contact your institution for details. Always password protect your phone with your password or even your thumbprint now. And if you have an iPhone, you can use that Find My iPhone app just in case something is off or you've misplaced your phone. I know that when I misplace my phone, I use the Find My iPhone app a lot. So of course, out there is identity theft. So some things to keep you safe are things like you should carefully monitor your accounts on a regular basis, whether it's daily, every other day, or once a week, making sure that your purchases are yours. When you decide to go out of the country, so maybe you're an international student who's coming to the US for the first time, if you're going home for a long break, you might want to let them know that you are going out so that way they can put a little note on your account. And if you notice anything odd going on in your account, like maybe a purchase you didn't make or you're unsure about, you can always give them a call or talk to their customer service and see what's really going on. I actually just had this happen to me the other day. I had a credit card transaction that went through and I did not make it. And it was for quite a bit of money. So thankfully I stopped it within a couple minutes of finding out about it. And that card has been canceled and they're taking care of it for me. So some other things about when you're choosing a financial institution are some questions that you should ask. Here we have some examples, but you definitely want to shop around. And we have a really great resource in the chat called a comparison chart from the Financial Wellness website. And so if you're ever in the need of looking for a new bank or are just using one for the first time, that way you can ask these questions, find them out, and then get the financial institution that's best for you. So I'm now going to pass it along to Andrea for the budgeting section.
Thank you, Seisha. I also wanted to remind everyone that we have another webinar exclusively on financial tools. So banking and how to choose a bank or a credit union, credit cards, debit cards. We go over everything. So this is an easy way to get more information on the things that we just went over in a very brief way. So I'm going to talk about budgeting, which is very important. It's something that's pretty dear to our hearts, being financial educators. It's also extremely important when you come to school because you're in a unique situation as students to have weird finances. You might get a whole lot of money at the beginning of the semester from loans or scholarships, or your parents give you a big lump sum and you're supposed to pay tuition and fees and maybe housing and make that stretch for 5 or 6 months. You might have more income that comes in maybe monthly or bi-weekly or weekly or kind of one-off during holidays or during birthdays. So that makes it more complicated as well. Not to mention that there's surprise expenses that popped up, or you don't know how to plan for all of the different costs associated with school. So we're going to talk about that. The first thing that I want to talk to you guys about is, do you guys think pizza is a need or a want? I want you to answer in the chat. Who says it's a need And who says it's a want? Need, want. Today it's a need. Want. Need. Oh my gosh, there's a lot of tension here in the chat. So I am going to answer it for you. It depends. So needs and wants are very, very important to define for yourself. They're also situational. So we know that pizza is a food and we need food to survive, but there are probably healthier and cheaper options than pizza. So most people consider it a want. But if you're in a situation, let's say you're a diabetic and you're on a trip and your only option in 1,000 miles is pizza and your sugar is dropping. You don't have any orange juice on you. You didn't plan ahead today. That pizza just turned into a need. So in order to be successful, you first want to identify what your needs and your wants are, and then plan to make sure none of your wants turn into needs. Okay, those are the most difficult parts of budgeting. That and sometimes is getting money. But we're going to talk about needs and wants right now. So an easy way to help you identify what needs are compared to wants is that a need is something that if you went without it, it could jeopardize your health, your safety, or your livelihood. Okay? So if it impacts your ability to earn money, your ability to stay safe, or your ability to stay healthy, it's probably a need. And everyone's minimum necessities differs depending on their values and depending on their individual situation. For instance, I probably couldn't do my job very easily without a smartphone. I answer emails about my job almost 24 hours a day, depending on when I'm awake. So if I went without that, it would make my ability to earn income much more difficult. So that has become a need in my budget now. Was that a need when I was in college? Absolutely not. But it is today. And it might be different with students now than when I was in school. So that's an important way to define needs and how it changes over time. The other really, really, really important piece of budgeting or planning your spending is to make sure that your income is more than your expenses. I know it seems super, super simple, but I'm going to explain why it's not necessarily simple. So a lot of students at the University of Illinois, I would say 50% across the entire University of Illinois system have to borrow student loans to pay for school. That also includes your living expenses. So student loans are something that's considered a source of income now, but you have to repay them later. So that's a type of income that you want to minimize. It's important also to consider that a job increases your income, but there can be unexpected expenses or unexpected loss of hours if you're an hourly employee that can affect your income or your budget. And you want to make sure to set money aside for those emergency situations and sudden expenses and surprise opportunities. That's something that a lot of people don't really plan for. They think emergency is something really, really bad, but it could be that you're saving for emergencies so that you can take advantage of a surprise trip to, St. Louis or Tennessee over a weekend that you were invited on. So it's important to consider all those different aspects of income and budgeting and surprise opportunities and surprise negative expenses as well. So there's lots of ways to keep track of your spending. And this is also a very difficult part of budgeting is some people think that they have to spend a certain amount of time and effort in a particular way on tracking their spending. So the old school way is the paper and pencil method. You might hear your parents saying that they balance their checkbook. Sorry, I lost the words for a minute. So some people balance their checkbook. So they write everything down and then they compare it with their statements or their online banking. That's one really great way to do it. That didn't work for me. I've also tried spreadsheets. So you save all your receipts and you write down what you spend, compare it to what you plan on spending, and make adjustments for the next month. That didn't work for me either. So I use an app. The goodbudget.com app, the Good Budget app, is similar to envelope budgeting, which some of you may or may not have heard of. Has anyone heard of envelope budgeting? You can tell me in the chat. So envelope budgeting is when you have specific envelopes that and you put cash in them every month. That cash is how much you spend on every component of your budget. So you only have $800 to spend on food. You can't go over that. Once you run out of money in that envelope, you have no more food, period. Same goes for your rent. I don't like using cash or keeping cash on me or keeping a whole lot of it in my house. That would be a whole lot of money. And if your house burned down, there's no way to replace that. That's gone. So the Good Budget app is a digital way to do the same thing. You say, I'm going to take, $600, and that money goes towards my food or my car note. And once you make that payment, you just log into your app and pull that money out. You subtract that money that you spent out. And once you're done, you don't get to spend any more on that particular item. So that's one way of doing it. And I use a combination of mental accounting and online tracking with some digital apps. So I'm going to explain what mental accounting is. Mental accounting is when you mark different buckets of money for different purposes. So for instance, if someone has a checking account and a savings account and a second savings account, we'll say they have two savings accounts. The checking account might be for daily expenses or monthly expenses, the needs portion of what they are paying for. The first savings account might be for emergencies, and the second savings account might be for surprise opportunities. However you want to tag the different monies that you have, different pots of money, you can do that way. It's important to continue to monitor your accounts though. So another very big and sometimes complicated piece of the budgeting puzzle when it comes to college budgeting versus other types of budgeting is that you have to account for tuition and fees. And it's more than just tuition and fees. You have to also cover room and board if you live on campus. You have to cover rent, utilities, and food if you live off campus. And that varies a lot depending on what room and board choice that you make, or if you live with roommates off campus or live alone. You also have to buy books and supplies, which varies drastically depending on what program you're in or what degree you're in, or if you're an undergrad student versus a graduate student. You also have to account for travel, either for conferences or to go home. You have to plan for emergencies, and you have to plan for recreation and fun. If you don't plan for recreation and fun, that's going to make it really hard to not be stressed out while you're in school and to monitor all of your expenses, because you're going to have some opportunities you want to take advantage of while you're in school. So I also want to point out that there are 3 websites that we put in the chat here where you can estimate what your tuition and fees are going to cost at the registrar's websites, depending on which University of Illinois you're attending. Is there anyone in the chat that is not attending a University of Illinois university? Well, I will let you continue to answer that. Hopefully everyone's going to University of Illinois campus. So there's a lot of variables when it comes to living expenses. And depending on which university you're planning to attend and what kind of lifestyle choices you make, your living expenses can vary pretty significantly from student to student. So you want to make lifestyle choices that allow you to live like a student while you're a student, so you don't have to when you graduate. Utilities are a really important part of living expenses to consider for a budget. So things like lights, water, electricity, parking, gas, trash, maintenance fees, and other things they could be bundled into your rent if you live off campus, or they could be all paid separately. So if you're looking for off-campus housing, you need to ask if that's going to be included or if it's not going to be included. So you can make the appropriate planning adjustments ahead of time. Depending on your situation, getting a roommate can help you just to get by while you're in school, and that might be a good option for you to decrease some of your spending while you're in school as well. So earlier I asked how many international students there were on the call. So I see that we've got some answers. Most people are coming to UIC or Urbana. So my question now is what country is everyone coming from to make it to those campuses? Germany, India. Lots of India and Germany. Okay, so that's great. That's great. We did a survey with international students a few years ago, and there were some surprise expenses or unexpected expenses that they had to pay for when they came to the United States. So depending on what type of phone contract that you have in the United States, and cell phone contracts in the United States are very expensive compared to a lot of other countries. So a lot of students were surprised that receiving phone calls and texts cost them money. Depending on your contract, it may or may not nowadays. Some were very surprised they had to pay for internet, how expensive telephone bills were, that they had to pay taxes. And tips are one thing that are complicated both for domestic students and international students, because, for instance, it's customary in the United States to tip anywhere between 15 and 25% when you're at a sit-down restaurant. However, if you go to a fast food restaurant where you don't sit down and have someone wait on you, it's not customary to tip anything at all. And there's a few in-between things, like if you go to a buffet in the United States, it's customary to tip a little bit, but not usually 15 or 25% of the bill. So those are complicated, not just for international students, but also domestic students. You'll learn more when you get here. Someone asked if it was customary, not mandatory. Correct, it's customary, not mandatory to tip. It is a more severe expectation depending on the type of restaurant that you go to. So if you go to a really, really fancy restaurant and don't tip, that's a faux pas. That's not a good thing to do in American customs. So that. So a few other things that international students were surprised by were the cost of health care or paying for health insurance, and the reception of wire transfers, and just the idea of paying for water as a utility. So those are some things to be aware of as international students coming to the United States. We have some more information on American customs and paying for things. So if you have any questions on that, you can reach out to us, and you have our contact information. So that would be pretty easy. Okay, so another way to minimize your spending is to make a list before you shop. You can do this any way. You can use apps to make lists, and you can make lists for all kinds of things. You can make it for holidays, for groceries, for home supplies, for beauty supplies, and it makes you much less likely to make purchases that are not on your list. So that's important to consider when you are shopping. Okay, I am going to hand it back over to Seisha to talk about credit.
Thanks, Andrea. So next up, we're going to talk a lot about credit, so hold your hats because it's going to be pretty fast. So, of course, there's some things you should know about your credit. So there's a lot that goes into credit and credit history and credit scores. We actually have 3 main credit bureaus in the United States that collect financial information that reflect how you manage your money. And basically the risk of you managing money. So these credit bureaus are Experian, TransUnion, and Equifax. So once all the information is collected, then companies can put together a credit history that represents your credit report. You might have heard of FICO. It's a commonly used credit score by lenders and a lot of others. And your credit score is determined by your credit report. So think of your credit score as a beautiful baked apple pie. And all the ingredients are the things that go into your history to make that pie beautiful. It's important to have a good credit score so that when you're older, you have access to purchasing things like a house or a car with a good interest rate. Of course, we always talk about which cards are safer to use. So you always, we have a debit card or a credit card. So which one do you think that is better for you to use? We have A, debit card, or B, credit card. So one thing you should note is that, when either one of these is stolen, or gone, you should contact that credit card or debit card or your bank and let them know right away. So I see some say debit card, some say both, some say credit. And if you guess credit, you guess correctly. Credit cards have more security than debit cards. We'll talk more about that in just a second. It's okay, Randy. We'll get you the down low. So there are more protections with credit cards if they're lost. So on credit cards, your liability or the amount you'll lose is no more than $50, and you're protected by federal law. Debit cards have a little trickier time frame. So if you report a lost debit card within 2 days, you're only liable or that you'll owe $50. However, if you don't report a stolen debit card or ATM card within 60 days, you're liable for up to $500. And if you don't report after the 60 days, your liability is unlimited. So if they spent $1,200, you might be on the hook for $1,200. Just something that you should be aware of. So we have, it's best to use a credit card when making online purchases. Consumer law gives you more protections if you don't receive a product you ordered or it wasn't as described. So recently I've seen things like somebody ordered a rug for like $10 and it ended up being like a little kid's rug for a dollhouse. So those kind of things can protect you when you're using a credit card, but not when you're using a debit card. So just some things to be aware of. So of course, when you're shopping around for the credit card, there are a few things you should consider. If you plan on rarely to ever have a balance, and the APR or the interest rate may not matter so much. On the other hand, it's very important that you, if you don't pay the balance in full most months. So if you are worried about your APR, and you don't pay your balance in full, you're definitely going to make sure it's a low rate versus a high rate. If there's an annual fee that everyone pays, that's important to everybody because we sometimes paying fees can be a lot. And if you pay late or go over the limit often, look for a card that lets you easily manage your account online and paying less or pay fewer fees. So, of course, if you're under 21, it's harder to get a card. So we joke that if you can't buy a beer, you can't get a credit card unless you co-sign with a parent or prove the capacity to repay. So what that basically means is that you are a person who can pay their bills back. Maybe you have a job that's part-time. Maybe you work a lot in the summers. Maybe you're a graduate assistant and you get income that way. Of course, being an authorized user under your parents' cards can build your credit. But if your parents use their credit unwisely, it can show up on yours too. So one great thing about this is that there's no recruiting on campus anymore, and they must co-sign with parents to prove capacity repay. Of course, one thing you should know is that credit companies now are accepting scholarships and student loans. That should be a big no-no to you guys. That money is, you're like robbing Peter to pay Paul. And what I mean when I say that is that you are taking money that you're going to owe later and using it to pay on a debt that you owe now. It seems kind of silly, so just something to be aware of. Yes, Randy, that's a great question. If you're a co-signer with your parents' credit card, you are using their money. So you're charging on their account. Great question. So we have some really great other benefits of the Credit Card Act of 2009. This, of course, is quite a few years old now, but overall consumers gain by this legislation. And we've been seeing a lot of changes because of this. One thing you should watch out for is shopping around for the best rate. It's much easier now to get a credit card with fair and clear billing and interest rate calculations. So, for example, the law limits when interest rates can be raised on credit cards, and it prohibits certain billing practices that weren't favorable to customers in the past. So some things that were positive is that they can't raise rates on existing balances, except if you have a variable rate or if you're more than 60 days late on a payment. Of course, if you're 60 days late on a payment, they're going to raise your rate. If there was an introductory period, and of course, if you work out an agreement, if you can't make payments as agreed. Increased rates only apply to new charges. And one other positive rate, of course, these are great things for consumers. So that's you guys, knowing that you are protected from some of these shadier things that were happening in the past. One thing is that when you are looking at a credit card, you should, and you're paying it, if you're not paying it in full every month, you should pay more than the minimum required. In this example, you can see here that the balance is $3,000. There's a minimum payment of $90, and the due date was back in March, or April, I'm sorry. But you can see that if you only pay the minimum payment on this balance, it's going to take 11 years, and you're going to end up paying over $4,700. But if you pay $103 every month, so just $13 more, you'll pay it off in 3 years, and they'll give you a savings of over $1,000. So just something to be considerate of when you are looking for purchasing, when you have a balance on a credit card. So one thing you should know is that we also have a really great webinar about staying on good terms with credit and debt. So I just kind of skimmed over a few pieces about credit, but we have a whole webinar dedicated to credit and debt. So if you have more questions or if you'd like to check it out, please feel free after this webinar. I'm going to turn it back over to Andrea.
Thank you, Seisha. Again, credit is super complicated, and we usually get a whole lot of people show up to our workshops on campus when we do credit-based workshops. So it can be kind of complicated. It's good to get as much information as possible. And again, Seisha just kind of skimmed the surface right now. So I'm going to talk about financing your degree. There are lots of ways to pay for school, and we're going to talk about those now. So this gives you kind of the basic idea of how financial aid works in the United States, or how the process of financing college works. You want to prepare and research all your options, including how much it costs to go to different schools. You should have already done this. I hope you already did this. You want to understand what your resources are. For instance, if your parents have savings, or if you have benefits from a job, or one of your parents' jobs, or grandparents' jobs, or you have military benefits, or you have other types of resources. You want to make sure you're aware of those. You want to apply for the free application for federal student aid, or the FAFSA, if you are a U.S. citizen. Make sure that you can utilize any resources from the government that's willing to help you out. You might receive your award letter from the school. If you are a domestic student, you should have already received that, and there might have been a deadline on when you need to accept parts of that award letter before it can be applied to your account. And then when you graduate, you'll repay any student loans that you receive, regardless of it if it is federal or private. And there are also some institutional loans, so you might even repay your school after the fact if you get a loan from your school. We have some more information in the chat. Since there's so many international students, oh, someone asked, is there aid for international students? So the only aid available for international students is not from the federal government in the United States. It would be from scholarships, private scholarships that you have to search for either in your home country or in the United States or with your school. So each one of the schools has a resource for finding scholarships. It might be through the financial aid office. The UIC campus has a office of special scholarship programs that we usually promote as well. So you might look there. There's some international scholarships that you might search for. And what most international students seem to want are loans. So in the United States, unless you have a cosigner who is a permanent resident or a U.S. citizen, you can't get a loan in the United States from a private lender. However, I have heard that there are some other countries, usually international students' home countries, that will provide student loans for students studying abroad or studying in another country. So you want to exhaust some of those resources. I know that there have been some other countries that do any type of international student loan. So you'll have to do your own research, but we can talk to you about the contract differences between the two, whether you have to start paying immediately or you can wait until after you graduate, and make sure to look at what the interest rate and the origination fees are on those loans. And any private loan, you're going to want to look at the same information. So if you're a domestic student looking at private loans, you want to look at the interest rates as well as what the origination fees are and how much you have to pay and when you have to start paying. Lots to look at. So if you need to talk to us, you can come talk to us about that. All right, so I talked a little bit about the process of applying for financial aid in the United States if you're a domestic student. Who knows when you need to complete the FAFSA? I'm going to have you put that in the chat too. So when do you need to complete the FAFSA, or the free application for federal student aid, if you're a domestic student? Oh. Someone says January 1. Do we have any other answers? Anyone else want to answer in the chat? October last year. Well, yes, if you are going to enroll in school this year, you want to have done it last year. Okay, 2 Octobers. That is correct. October 1st. You can start completing your FAFSA as early as October 1st for the following academic year to be eligible for first come, first serve aid. So the thing is, this just changed last year. It used to be January 1st. So we're in this weird transition where some people think it was the first of the calendar year, and now it is October 1st, so that people get in their information earlier. They get access to what their award letters are a little bit earlier, and it helps everyone involved a little bit. The thing is, you have to remember to do it as early as possible after October 1st. In Illinois, if you're an Illinois state resident, you know today is when they need to complete a budget. The state needs to complete a balanced budget by the end of the day, or some critical services may not get funded for Illinois residents. One of those things is MAP grants, which has been on rocky road. It's also one of the first things that has historically ran out of money. So if you didn't get your name in the pot as early as possible, even if you're eligible for the MAP grant, you might not get it. So you want to get it in as soon as possible, just in case they do fund that. Okay, so there are some other methods of payment for paying your college tuition. There's out-of-pocket. We talked a little bit about what resources are available. So you might pay with savings, like a 529 plan or a College Illinois plan, depending on what your family started for you. You have to work with whatever organization sold you that savings plan to get it applied to your student account. Different organizations have different requirements for taking that money out. Our office, USFSCO, has a department that applies those funds to a student account, but the university doesn't control how it is actually pulled from the savings account, that savings fund, because it's special. We also have a payment plan you can use to spread out some monthly payments over the semester or year to pay your tuition and fees and even housing. And you may also use tax credits to pay for a part of your educational expenses. So that's another piece of the puzzle. You might have financial aid like grants or scholarships or work study. Something to note about work study is if you decline it the first time it's offered, you never get offered it again. So you want to really look into any federal work study positions that you are able to get the first time that you're offered it. Someone asked where you can find work studies on campus. So it differs by campus, and like I said, we're for three campuses, 3 universities. There's usually a job board where you can find work study positions as well as any type of hourly positions or student employment positions on campus. So we will also include some information on that in our follow-up email. And then there's obviously student loans. I'm going to talk a little bit about student loans now, but there are basically 2 main types of student loans. There's federal student loans and private student loans. Federal student loans are provided by the U.S. government. Federal Direct Plus loans are technically a government loan, but it is only for parents for undergrad students and only for some graduate students if you're a graduate student. So we'll talk a little bit more about those student loans now. So the 2 main types of federal student loans, which are the most common types of loans distributed to students in the U.S. that are domestic students, are subsidized student loans and unsubsidized student loans. Subsidized student loans, interest does not accrue on the loan while you're in school, at least half time, which is 6 credit hours at all our universities, or during any deferment periods. And the government subsidizes the interest during these times. That or during deferment period depends on when it was dispersed. There has been a couple times in history when subsidized student loans started accruing interest during their grace period, not their deferment period or in-school deferment period, but during their grace period. So that's an important piece of the puzzle to pay attention to if you have subsidized student loans. So again, subsidized student loans doesn't accrue interest while you're in school, at least part-time. Unsubsidized student loans start accruing interest immediately after the loan is dispersed to the school. You are responsible for paying the interest the entirety of the loan, and you can choose to pay that interest while you're in school or let it to accrue while you're in school and just pay it when you graduate. You'll start making payments on it. So, based on what we've discussed today, which of the following is true? A, loans have to be paid back. B, scholarships have to be paid back. C, grants require receipts for purchases. Or D, all loans require you to have a minimum GPA. You may answer in the chat. Hey, you guys are good. Loans do have to be paid back. So I have really only scratched the surface about student loans today. If you have more questions about student loans and more specifically about how to repay them, we have a webinar on student loans. It's a recorded webinar, so we'll send that out as well. Ta-da! You can look at that, check that out whenever we're done with this webinar. I'm also going to talk a little bit about how to maximize your time on campus. So school is super expensive and you come to school. So who came to school to get a good job? You can answer that in the chat too. I know I started school to try to get a good job. The important thing is you want to maximize this investment. Education is seen as an investment and you want to maximize it. So your major, just so you guys know, there's been some tension in the media for the past couple years on whether or not it's worth it to go to school. And we are here to tell you that it is. According to a study done just in 2014, both bachelor's and associate's degrees still tend to have a significant return on investment of about 15% over the past 10 years. So that's an important thing to note if you are considering dropping out. Don't drop out. Something you might want to consider is how much of a return on investment you'll get on your specific degree. Different majors will have different returns or income potential depending on what you're studying and what you're going to be qualified to do when you graduate. So the best way to estimate that is by looking at your estimated earnings, maybe for the first 20 years of your career, and then take out the total cost of your education, including out-of-pocket payments, student loans, and any interest paid on those loans, and then you get a net return on investment for your degree. You can look up what the net return on investment for your degree is at payscale.com/college-ROI. I think we're going to put that in chat. We already did. Great job, Zongchi. So one degree might cost more than another, but the opportunity cost of being outside of the workforce might be part of your considerations on what type of degree that you're going to get, or if you're making decisions on whether or not to change your major, that can kind of help you out. So this slide I really like because basically it shows you two things. That the more education that you have, the less likely you are to be unemployed, and the more education you have, the more money you make. So make sure that you complete your degree because this is based on Bureau of Labor Statistics data. So that's based on real people making real money. It's not a survey. It's Bureau of Labor Statistics data. So that's an important thing to note. More education means more money and more likely to be employed. There are several ways to maximize your education's investment, your return on your investment for your education. You want to first reduce any education costs. An easy way to do that is to borrow less. You can search for scholarships or work part-time or live at home or with roommates to help reduce those costs and borrow less. You can also increase your potential by networking while you're in school. Use career services as soon as you're able. So when you get to campus, start going to the career services office. They want to help you as soon as you get on campus. Look for jobs, understand how to interview, write resumes. They'll review and critique your resumes and your letters of interest or cover letters, so you want to make sure to be using them as soon as possible. You can join a club or volunteer to get access to different types of networks and gain some different skills and experience, and you want to use the services that your fees are paying for. So for instance, there are tons of places on campus that you can get food for free just by participating in programming. You are already paying for those services, you might as well use them. There's cultural houses on the Urbana campus. There are other types of support services at UIS, like Student Life or UIC as well. So make sure to use those. Some people say that you shouldn't work while you're in school, but there are some studies that show if you work up to 20 hours per week, people that work up to 20 hours per week while they're in school full time are more likely to complete their degree, and they're better at time management skills. So don't let that deter you from looking for a job and working while you're in school, both to decrease the cost of your education and increase the likelihood that you'll finish your degree. Another thing to really aim for is to limit how long it takes you to finish your degree. Your degree, if you're an undergrad, should take usually 4 years. That's the average. Some of them take 5 or 6, just based on full-time loads, but most will be done in 4 years. And you want to do that to avoid any additional costs of tuition and the loss of potential income that comes from needing to stay in school. So for instance, if you finish in 4 years, there's no increased opportunity costs or potential loss of earnings. If you take 5 years, and this data is based on, I believe, UIC's basic tuition and an average yearly salary of $35,000. So if you increased by 1 year, it cost you about $51,000. By 2 years, that's over $100,000 it would cost you extra because you're not making money and it costs more in tuition and fees. And that does not include your living expenses because your lifestyle varies a lot depending on what choices you make. All right, so we also have a digital badges program. For those of you that are not aware, you can earn a digital badge to place on your online portfolio or LinkedIn profile or wherever you want to show off your skills, be it financial or professional skills. More and more employers are looking at financial stability as a measure of productivity in the workplace. So it's important to highlight skills like finances, like spending and saving and understanding credit, so that you can be more marketable to employers. Outside of Illinois, it's still legal for employers to use your credit as part of your background check, and you might have no credit, and that could prevent you from getting a job. So if you can show, hey, I'm financially aware in these other categories and these ways, that could help you land a job. So take that quiz and we will get you access to some more information. You have to complete 3 spending badge eligible activities in order to qualify for the badge. You want to make sure to do all 3 as soon as possible. And then you can earn up to 5 different badges in different categories. So we want you to stay in contact with us. We're putting all of our information in the chat here. Extension is also a really great resource for you to use no matter where you are in Illinois or nationwide. We're going to be including some more of their contact information when we do our follow-up email, so you can look out for that as well. And I'm going to answer some of the questions I saw here in the chat.